Well, welcome everyone to this special edition of the Appraisal Buzzcast. We've teamed up with our sister company, PI Education and The Sound of Pursuit, for a conversation that bridges both our audiences. You're going to recognize the host of our sister podcast because it's, you know him, you love him, it's Hal. Let me bring him in. Hey, Hal.
It might be a bit bold to say you know him, you love him, but the listeners will certainly know me.
Well, a lot of our listeners usually are the appraisers that listen to the Appraisal Buzzcast, but you also host The Sound of Pursuit, which is targeted for private investigators.
Yes, it is. Yes, it is. And it is a really fun podcast to do because it kind of scratches that itch of private investigations for me. And I get to talk to some amazing investigators from around the country. You know, Jim, I'm in the world of designations. I have a couple of designations, but the one I'm actually the proudest of is my certified fraud examiner designation, which I am now certified fraud examiner retired. And that designation took a lot of work and a lot of time. And it's one that I'm really proud of. And the work on the fraud side of things, I've been able to bring into the real estate appraisal world and work with appraisers who have been accused of fraud in the past. So this is a topic that I think is really interesting, and I'm so excited to share this interview. We've got Porsha Louder joining us on the podcast today, and she's a former real estate agent, and she was convicted of fraud and spent some time in the Hooskow, and she has agreed to come talk to us about her conviction, the crime she was convicted of. And I think what we're trying to get here is, Jim, we talk all the time. You've heard me say this a number of times. USPAP says that we appraisers have to gather, verify, and analyze all information necessary for credible assignment results. Well, the verify part is pretty darn important. And this is an example of why we need to make the phone calls and talk to the people and verify what actually happened with the sales we're going to use in our analysis.
Yeah, I think this is really exciting. The fact that we get to bridge the gap with one guest who's going to have a lot to tell us. She's a speaker, an author, an advocate, and she's going to let us learn from her story and talk to us about how we can educate those going forward.
Yeah. And I will say this, Jim, there may be some folks that want to hop in here and say, oh my goodness, why are you having a convicted fraudster on the podcast? Why are you listening to someone like this? Here's the thing. She has served her time. She was found guilty and served her time and done that part of her process. I think it's pretty cool that she's willing to get out in front of this in a very public way like this and on her Instagram feed and talk about how she got herself into trouble. And I think it's educational for us as appraisers to understand how some people are operating in the market that we're analyzing.
Well, let's bring her in and get started on that.
Sounds good.
ACI introduces ACI Sky Workbench, a cutting-edge cloud-based platform designed to streamline URAR appraisal report generation like never before. With seamless workflow integration, automated data management, and built-in compliance, Workbench empowers appraisers to work smarter, faster, and with greater accuracy. Visit aciweb.com for more info.
You're listening to the Appraisal Buzzcast with your host, Hal Humphreys.
Porsha Louder, thank you for joining us today. Let's start at the beginning. For our audience of appraisers and investigators, can you tell us a little bit about your background and how you got caught up in this mortgage fraud business?
Sure. Yeah, thanks for having me. I got involved in real estate in about 2004. Prior to my involvement in real estate, I was a business owner. I was a photographer. I was a really busy photographer. I was photographing about 200 weddings a year in Utah.
Oh my gosh.
Yeah. So it's a lot when you consider all the engagements and the bridals. And my family, I grew up with a family of photographers. My uncle owned a photography company that I worked for prior to starting my own company. My parents were hard workers and they were also real estate investors. Not large scale, but we bought a home and upgraded about every 2 years,
Okay.
and they always made money on them.
Okay.
So real estate wasn't foreign to me when the market started going crazy in about 2004 in Utah. In fact, I decided to build a home to accommodate my photography business. So I had 2 young children. I was working from a small home and decided I either needed to build a home with the studio or I needed to move my studio out. And it made more sense for me to just build a home and put a studio in it. Now, we moved the lots in the neighborhood. I bought a lot. I think I paid $70,000 for it. And by the time the home was built, the lots had gone up to about 110,000. So, I mean, they really were moving fast.
Right.
And I went and decided that when they opened up a new development behind our home, I thought, oh, I'm going to put some of those lots under contract. And so I think I spent $2,500 to lock up 2 lots. My husband was so frustrated. He's like, what are you doing? I mean, we could lose $2,500, you know? And so I went over and I asked for the check back and they said, sure, no problem. And then those lots went up 20 grand a piece over about 30 days. So I would have made $40,000 on that. So then I'm mad. I'm like, I am not going to listen to you anymore, you know, because I worked really hard for that kind of money. I mean, I worked all summer long, night and day. And I thought, geez, if I could have made that, I mean, a few of those, and we could have, I think our home at that point was like 300 and something $1,000.
Okay.
You know, we just built, it was a nice home. And I thought if I could pay off my home, I wouldn't have to work as much as a photographer. And so I started looking for other lots to put under contract. And I think the first one that I actually closed on and sold, I made $30,000 on. So it was exciting, big money, right? And so then, you know, with me, I'm a little bit aggressive. And so I thought, well, if one's good, you know, 3 or 4 is probably better. And so somebody showed me a new development, and I could lock up several lots. I think I locked up like 6. And I had to pay $10,000 per lot earnest money.
Okay.
And then I needed to close within 30 days. Which is kind of scary, right? If I wasn't able to sell it, how am I going to close these lots? But I'm moving fast. I mean, people are locking things up quick. And so I didn't really think too much about that. Well, the earnest money was non-refundable. And so somebody, you know, introduced me to the concept of hard money lending, which is just a very high interest rate. Somebody comes in and closes these lots. So I found a hard money lender and he was willing to close on the lots, but he wanted an additional 20% down. So it was about $100,000 that I had to come in with to close on these lots. And the only way to get $100,000 was to take a home equity line of credit against our house. So this would have been a really good time for me just not to do this because it's so risky, right? Like, also risky to close in hard money, then what? Well, I thought we'll get construction loans. You know, I knew a lot of other investors that wanted to build and get involved. I mean, it was exciting, this feeling of I don't want to be left behind. And so I took the home equity line of credit. We closed on these homes in these lots in hard money, and then started trying to get construction loans. Well, construction loans are really hard to get.
Mhm.
They're much harder to get than getting like a refinance or just a regular home loan. A construction loan is much more difficult. So we had to get plans for the homes. We had to find people that wanted to build them. Like, you have to get approved. It is a process.
Mhm.
And it drug on and on.
And all of
And
these things are free too.
No, yeah. 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 So at this point, I'm pretty much upside down. I mean, neighbors that are investing, we're all kind of investing, trying to keep this going. And I just remember the weight of that was overwhelming for me. I really felt scared. And the hard money payments came due every single month. And if I couldn't make the hard money payment, I'm going to lose the lots and I'm going to lose the earnest money.
Yeah.
So I'm in a pretty tough situation. And about this time, I met two gentlemen, and they were reputable guys. One of them was an accountant. The other one was a builder, a successful builder. And they introduced me to what was called an equity deal. And that's a nice way of saying it. So I've been told. So people would, I mean, there's lots of other words for it, but that was the word that was being used at the time. And there were, in fact, billboards that were advertising that you could use your credit score, buy a home, pull cash out, right? So they introduced me. There were two homes they showed me. The first one was, it appraised for like 2.8 million, and I could buy it for 1.5 and then get like a $500,000 cash back, right? So they already had the appraisal on it for the 2.8, and they had built this home. They showed me the home, and I remember going home and telling my husband, I was like, that seems insane. Like, why would I ever borrow more money than I'm paying for the house? It just didn't add up. But a $500,000, the way they explained it was, it's exactly what the banks do. It's called arbitrage. They borrow cheap and then they turn around and lend for more. And so you're paying all this money in hard money. If you get that $500,000, you don't have to pay that the 10,000 per lot per month. Your payment now just goes down to like 6,000 or 7,000, because you could get like a neg-am loan or a interest-only loan. So they're like, you just pay the house payment and you can rent the house out, or you can move into the house. This is a really good deal. Well, the first one, I just still couldn't get it just didn't add up to me. And then they showed me another one, which was even worse. It appraised at $5 million. Again, they already had these appraisals, and I could buy it for 2.5. And to give you an idea of, like, it was a weird home. It was that weird home in the neighborhood that had like a massive amount of square footage. It was in a good location, like a really nice location in Utah. So there's other comps, but it was weird. Like, people had kind of, you know how they take a home and kind of add to it as they go? That kind of home. You're like, yeah, I've seen all that.
Yeah. I've actually
So
probably done that myself on houses in the past. So yeah, I know what you're talking.
yeah, yes, exactly. So it was a weird house, and I thought, well, how do I close it? I mean, they were telling me I could get $1 million cash back, you know? And so my thought was, I will go talk to, it was a different hard money lender, and have him look at it with me. And so he came and looked at the house, and he said, man, this could be really good. Like, I could use some of this cash too. I'll help you close it. So we closed it. Again, though, we closed it in hard money with the intent to refinance it and get cash back. Still, I don't know much about loans. Well, a jumbo loan at that point was $3 million. You're not going to get a loan for over $3 million. And they're saying 80%. You're going to get like a 50% loan over $3 million, which means it's barely going to cover the cost of the house. There's no cash back on that deal.
Yeah.
I didn't know any of that at that point. So now we closed on this house in hard money. So now I have the lots and this house that we're trying to refinance. So I'm really upside down at this point, really. So I remember going to a mortgage broker who said, I can get you the loan. And I sit down with him and he said, you're doing this all wrong. Let's map it out. If this is what you want to do, I can help you do it. And I have a lot of people that want to do this as well. And so we put it on the board, and he goes, you need to buy a house under $3 million. It has to appraise for under 3. And if you get the appraisal at 3 million and you can buy the house for $1.5 million, I can get you cash back up to 80%. And before you even close on it, I'll help take the risk out of it for you. I'll send the appraisal over to the bank. They'll look at the appraisal and tell us what they'll lend on it. So we'll know before you even buy it. We'll get it approved. We'll send all your documents over and everything. And these loans, I mean, they were like, you didn't hardly have to have any documentation. Yeah. I found out later, though, even though it's a stated income loan, if you state your income wrong, it's still a fraud, because it says at the bottom that you'll state it right. And it's a federal charge, because it's a loan application that, is controlled by the FDIC. So anyway, so I filled out a loan application. This was in me and my husband's name. We found a house that fit that criteria. He got the appraisal. Now, this is kind of crazy at this point. He gets the appraisal at 2.9. Actually, I have gotten appraisers now. At this point, I have now found the same appraisers that these guys were using. I went to them and said, all right. And they charge $5,000 per appraisal. So a bell should be going off for y'all. And the reason they said they did that was because it's a jumbo, and jumbos are more expensive. So I went and got an appraisal for 2.9, sent it to him. He sent it over to the bank, and the bank had their own appraiser appraise it, and they came back at 3.1. And he said, oh, we're golden. But again, now a lot of the comps, so we've got, in my mind, a conspiracy between the bank, the mortgage broker, and the appraiser, and myself, and all of us are kind of in on this. So that's how it started out, and they did approve the loan. I got $500,000 cash back. I used that money to start paying hard money loans, and then I became the person in the community that people came to find these types of deals. And so I started locking them up everywhere I could. And the more we closed, the more comps we had, right? Because we closed them at $3 million. So now you've got several houses that are appraising for $3 million that we really locked up with a joint venture for 1.5 and got all the cash back on it. And that's what ultimately led for me to a 7-year prison sentence.
Okay, so just as a sidebar, and these were federal charges, is that right?
Yes. Anytime the bank is FDIC insured, then they're going to take it federal. Or if money's wired in a furtherance of a fraud,
Sure.
it becomes
Sure.
a federal charge.
So just kind of walk me through, what was the total amount of the fraud that they charged you with?
They hit me with several homes. Well, so first of all, they thought that I was using straw buyers.
Mhm.
So they were kind of confused by it. They thought that I had gone and found people to use their credit and I was getting all the cash back, which wasn't the case.
Right.
On my own home, I got cash back, but there were several other investors and they got the chunk of cash back. I would just make a fee to put it together.
Yeah.
So but nonetheless, they still decided to charge me for all that money that went to other people. And so they said that I was involved, and I might have been, with about $80 million worth of houses. That could have been the case.
Okay.
They hit me with $11 million. They said 60 homes. I'm not going to dispute it because it was there were so many of those homes that I lost money on, even though the numbers are crazy, right? So I lock it up. By the time the hard money clicks away and somebody buys it and the loan comes through and the loan's for less, I might have lost 50 grand, or maybe I made 50 grand, but there's still this big difference between, well, and ultimately what they did is they charged it based on the loss of the market. So if a home appraised at 3 million, but when the market dropped, it was only worth 800,000, I took a restitution hit for $2.1 million.
Okay.
And so my restitution is 11,600,000 and change.
Good heavens.
Yeah.
I'm curious about the sentencing guidelines. I know that once you click over $1 million in fraud charges, the sentencing guidelines increase substantially.
Right. And that was, when I was arguing with my attorneys, I was like, well, I didn't get that kind of money. I didn't get the money back. And they said, well, yeah, but they're just trying to get the guidelines. They need to show the fraud where they need to show it,
Yeah.
right? So it's not going to matter because you're never going to be able to pay it back. And basically, I was going to get the same sentence if it was between this range and this range. They said, we know that you at least were involved in this many.
Yeah.
So even though they're bumping it up, who cares? It's not really, well, that's just what it is.
It's just what it is. It's just what it is.
Yeah.
So in the world of fraud, and I'm a certified fraud examiner, retired. So I've been a CFE designated member of the Association of Certified Fraud Examiners. But in the world of fraud, we talk about pressure, opportunity, and justification. And in hearing your story, the fraud triangle, pressure, opportunity, and justification. The opportunity part is absolutely clear to me. Like, people were playing fast and loose with money and hard money, and you're letting you take cash out of an overappraised house, or maybe not even an overappraised house, but you get it for less money, whatever. But am I right in listening to your story that the pressure, it's self-induced at this point? You've gotten yourself kind of into a hole.
Oh, for sure.
Okay.
Yeah. I mean, I can't, I just kept dreaming about getting back to zero. I just like I thought, oh, wouldn't my life be a dream if I could just get back to where all I had was that $300,000 house. I had to sell that for the cash back. I was just moving. I mean, I was in a great big real estate Ponzi nightmare
Yeah.
trying to get out.
Yeah. And then the justification, was there any conversation about everybody's doing this? This is the way that this works.
Oh, for sure.
Okay.
Yeah, for sure. Like I'm like, well, that guy and that guy, they're better, they're upstanding people and they're smart people. And I mean, it's on billboards. Like you can hear all the
Oh,
justification,
yeah.
right? But here's the thing, I knew it wasn't right. I felt it. And I made lots of excuses. And at the very least, it was extremely risky, but I felt that it was more than that. Like I knew there were little grays that just got darker and darker and darker. You start out with, oh, well, I'm just going to, state my assets like this. And then pretty soon I'm tricking things up to show that I have money here and money there. And I'm buying a CD, but taking a loan on it so I can make assets work. And if somebody else needs to put their name on my assets so that they can also qualify, you can do that too, right? So, I mean, there were all kinds of areas. Yeah, I went down a really dark
It's a
rabbit
pot
hole.
of spaghetti.
Yeah, it is.
I mean, I can imagine the examiners looking at your case trying to unravel the spaghetti, but what I'm hearing you say, like, I'm going to guess you didn't fully understand all of the threads of spaghetti at that point.
No, and that was one of the things that was so hard. I had an attorney who had been a former criminal defense attorney, and he had a really good accountant. And I went and spent a week in Boston trying to unravel this. And he said, you should be indicted just for the nonsense of how this is all put together. He's like, it is so horrible. He's like, I cannot believe what he's like, whether he just thought it was just ridiculous that I had money coming from here to there to there. And I think that it was very frustrating and confusing because it wasn't clear cut.
Yeah.
I mean, I had trash bags full of documents. Like it was just horrible.
Yeah. All right. So at what point did you realize, wait a minute, this is getting out of control?
I mean, when the FBI showed up, it definitely wasn't the best
That's
day
a
for
red
me.
flag.
A red flag. But before they showed up, I had title companies that were starting to say, we don't want to close deals for her.
Okay.
So, and I went to a real estate attorney, and there's some confusion with that. This is a bizarre twist, but there was another Porsha doing real estate. And that's just odd, right? There's just only one Porsha. This lady was Porsha Bunker. I'm Porsha Louder. She was also indicted. So it's like so unusual that title companies thought we were like aliases of each other.
Oh, I got you.
That was before there was even a grand jury. So that happened. I went to an attorney. My attorney looked it over and I drew it all out. And at first they thought it was brilliant. They're like, what a brilliant way to, and then they called the next day and said, oh no, we talked to a criminal defense attorney. You better come back in. Yeah. It's a problem. And then they told me, you're not that important. You need to just lie low and quit doing these deals. And my attorney even said, he goes, you're not even making the majority of the money on this. Why are you taking so much risk? These other investors are getting this $500,000 back for their credit score. Who cares? Why aren't you keeping the money? Which would have put me as a user of straw buyers if I would have been the one getting all the cash.
Yeah.
But it was too late at that point. There was a grand jury investigation. The FBI was investigating. And this was a time where it was a real popular thing to indict because the market was crashing. So they were looking for people.
So at this point, when you're talking to the lawyer, when the FBI shows up, this 2008, 9?
Yeah.
Okay.
It's 2008, 9, right? Okay. It's right in there. And now I'm saying, I have all these houses that I'm making payments on. If I just keep making the payments, will I be okay? And my lawyer's like, no, actually, they don't care. You should stop making the payments because they're going to indict you regardless. It has nothing to do with that. And so I quit making payments and we just moved into a townhome and tried to my husband went and worked as a truck driver. Like we were just surviving. And I was basically spending every dime on attorneys trying to avoid being indicted, which was a big old waste because they were going to indict me. So yeah.
All right, so I'm gonna go off script for a second and just talk about So you've got appraisals for properties that show 3 million. You've closed it at with hard money at 1.5 million, and then you
No, this is tricky. So what we did, we ended up closing them with hard money at the 1.5 so that we could set the value. And then we put a lien in second place and then the bank would come in and refi it and pay off that lien, and that's when the cash came back.
okay.
Because if we would have closed at 1.5, there would have been a HUD at 1.5. We needed a purchase price at 3.
Yeah.
And that was the thing that my lawyers thought was really smart until they talked to a criminal defense attorney. And then they said, nah, it's a fraud.
Yeah, and for an appraiser out there looking at sales to use in their analysis, an honest appraiser out there just doing their job, is there any way they would know that these are fraudulent sales?
I think that people knew that, I mean, there were like neighborhoods of these homes going up that were being built for this purpose. But I don't know what an appraiser really can do at this point when you have, I mean, here's the thing, the appraisers that we used kind of chose the high comps, right? They disregarded the low comps because there were houses closing at 1.5 because that was the real value. So there's houses that people are buying at 1.5.
Okay.
But they're disregarding those and using the high comps. It's what my appraisers are doing. But I would think a normal appraiser would probably, but a normal person isn't trying to get a $3 million value out of a $1.5 million house. So they don't really have to be fraudulent, right?
I'm just thinking if I were an appraiser and I found these sales at $3 million and I just, something in the back of my neck stood up and said, hey, wait a minute, this seems weird. And I started making phone calls. Is there a chance somebody in the phone call process, an agent, a buyer, a seller would have said, oh no, this is a kind of side deal that we're working?
Well, I had agents. So first of all, I'm not licensed anything. So right away, when I'm closing a lot of deals, I have agents come approach me and say, I want to be your agent. I'm not listing anything, and I don't want them on the MLS because if it's on, I'm trying to lock things up before they hit the MLS because I can't have it on the MLS at 1.5 and then I go in and close it at 3. That's a problem.
Yeah.
So I'm saying, I'm not interested in working with you, realtors. Well, realtors didn't like that. So they called the Division of Real Estate and filed complaints.
Okay.
And I got a cease and desist, but I'm not licensed anything. So I'm like, sorry, people, you don't get to tell me I have to stop, which isn't the best.
If only you'd listened to the cease and desist in the first place.
Oh, for sure. Yeah, I think so many opportunities to stop and take a look.
Let me ask you this. There are a lot of people in our audience, both on the private investigative side and the real estate appraisal side in the lending world, who spend their careers working to prevent the kind of fraud you're talking about. From your experience, what do you think real estate professionals and investigators often miss or misunderstand about the people who are committing fraud like this?
Oh, that's a good question. I get emails and requests from people all the time now, basically saying, hey, I'm doing this deal, but it's not the same as what you were doing, right? I'm like, yeah, actually, that's a fraud. I think that when people are looking for a way to skirt the system, they're looking for evidence to make it okay, because that's what I was doing. I was looking for evidence to make it okay. I think as an investigator, you have to look at all the pieces. Like in our case, it's unfortunate, but we had banks that were taking, under the table pay to get to do a high, like I would get 90% on a $3 million house, but we'd have to wire an extra 30 grand to a head executive at Washington Mutual. So it's very complicit. There's a lot of parties involved and aware of it. You usually have to have several people.
Yeah.
And I wouldn't have been able to do this without a mortgage broker, a bank, an appraiser, a title company. Title was I feel like was innocent because all they did is follow the agreement that was set before them.
Yeah.
Yeah.
But there's probably a sense that even on the title side, there were people that kind of knew and were looking the other way because they're collecting their fees and they're doing their work.
Yeah, and it was very common at the time.
Yep.
I think Yeah.
All right. So you served 7 years, did you say, in federal?
I served
Okay.
5. I was sentenced to 7. I got a year off for good time and then a year off for doing a pretty difficult program that got me out sooner.
Okay.
So,
Okay. So, just for the folks out there that are considering doing some kind of a creative process to beat the system in some way or another, what was that experience like?
well, before I even go there, I would just say there's really no way to get ahead with this kind of a deal. It never works. I was in prison with so many people. I've never seen somebody get ahead, and I've learned now, like I won't invest in any. I am so cautious because I work hard and I build right, and there's just no way to get around
Yeah.
that. There is no hack. There is no get rich quick that works for everybody. You think other people have it going on and you've just missed the boat. You're wrong. They're just pretending. Everybody worked hard for what they have. And so there's that.
And if they didn't work hard for what they have, they're probably going to get caught.
Right. It's just not worth it.
Yeah.
It's just not worth it. And I would say that the process of going to prison was extremely painful and devastating for me. Really was. Like I was separated from my children. I had a child that was 7 years old and I was sentenced to 7 years in prison. I looked at her and went, your whole life I've just been sentenced. I mean, I left the courthouse the day that I was sentenced and literally was in shock. I couldn't even speak because the clarity of how foolish I had been and how I had traded something so valuable as time and my integrity. Like I felt it so deeply that day. I had been in denial. The FBI was right. They kept saying, you're in denial. I was in denial about what happened. And it became very clear to me that day. Now, it still took me a couple years in prison to really own that I was 100% there because of my choices. Because I could still say, but the judge gave me a high sentence. He maxed me out. The FBI didn't look at the banks. They didn't look at the appraisers. They didn't. Doesn't matter. It doesn't matter. It's only your integrity that you're responsible for. The other thing that has been so interesting for me, I've been home from prison for 5 years and I work 2 jobs. I work very hard. People think I do a lot on social media and they're like, oh, she's still hustling the system. I'm like, you guys, I work my little guts out and I still don't own a home and I may never own a home again. you know, there's no way to, I mean, there's no way to hustle and get ahead. It's just hard work. But also, when I got home from prison and I looked around at the people that supposedly got away with it, I realized how fortunate I was to have paid the price
Yeah.
because they are still in a place of total hustle denial.
Yeah.
And I'm watching their lives and I'm like, I was able to kind of pay the price. And I'm grateful for that. Even though it was a painful price, I've learned it's always just pay the price and do it right. I mean, it really pays off in the long run.
The
So,
interesting thing in my work as an investigator, I've worked on several criminal cases, and one of the things that always strikes me about, and luckily my prison visits have been visits as an investigator, not a
right.
family member. But there's a dehumanization of everybody involved in the criminal justice system that is incarcerated. Not just the person
Right.
incarcerated, but their family members, their children, their
Yeah.
husband, wife, whatever. Um,
Right.
and everyone that I've talked to that has spent time in either state prison or federal prison, they've had, even the ones that say, I didn't do it, I didn't do it, I didn't do it,
Right.
they still are absolutely gobsmacked at how everyone around them is treated when they come into the system. So I guess the point I'm trying to make is this is not just impacting you, it's impacting your
Oh,
family and everybody around you.
it is my greatest regret. I am grateful. My greatest regret is that my children suffered,
Yeah.
that my family suffered the way that they
Yeah.
did. And there's no way I can ever, I mean, I had to grieve 5 years gone,
Yeah.
5 important years of their lives. And as much as that was painful for me, the greater pain is that it affected my children and hurt them so deeply.
Yeah.
What I found, my only way out was total ownership and responsibility. And by doing that, I could look at my children and say, I did this to you. Tell me how I hurt you. And we could start there to build something new. I do believe that that was the best choice and the only choice that I could make to allow my children to move forward.
Hmm.
And it has brought about some restoration because my children, I think, have a pretty compassionate view of others who have been through this, which I'm grateful
Yeah.
for. But there's still suffering that took place that I would take back in a second if I could.
Yeah.
Those were such important years for my children. One thing I do know is my kids are like my son, they don't take shortcuts. They've learned, they don't take shortcuts.
Yeah.
They do things right, and I'm grateful for that.
You
So,
have done a really good job. And the way I came across you was on Instagram. And one of your reels popped up on my Instagram feed, and I watched it. I'm like, wait a minute. And I went over to your Instagram page and started kind of scrolling through the reels, and I was like, look, I mean, it's a really hard thing to share openly like you do. Do you think this message resonates with a lot of people? And do you think there's an educational component to you that is helpful for the general public out there?
I hope so. I hope so. I think it's my goal to humanize something that's very human because it does happen. Like people do make mistakes, and I want people to know that there's a path forward when you do. I have chosen to kind of claim it. And we talked a little bit about that in the beginning. It was such a devastation to my identity and myself. And there was some freedom in it as well. The day that I was sentenced, it's like, now what? Now I move forward. And I think that it has been helpful. I've written 2 books. I will probably write another one that goes into more detail about the fraud. I honestly couldn't. I wrote my first book when I was out a year, and a lot of it was more my heart and soul and what I had been through. But I think that as many emails and messages I get from people that are like, well, I'm doing this. What do you think? And I'm like, no, absolutely no,
Yeah. Yeah. And that
So there's still people doing it.
that
Yeah.
leads to kind of my last real question, which is, you know, for people out there that are hitting red flags, but they're feeling
Yeah.
pressure to look the other way or to do a thing, or
Yeah.
what is your advice to them to avoid doing these stupid things?
Yeah. Um, I absolutely felt it in the beginning. I felt that place inside me that said, don't go down this path. My logic, my soul, whatever you want to call it, knew that it wasn't the right path. I had worked hard for what I had, and there was common sense in me. And I chose to look at other people and make excuses and say, well, I want to be a part of what they're doing. The rich, those people are doing it. I can do it too. Um, I don't know how to tell somebody not to go down this path. Other than just like there is so much strength in making the right decisions. You can't see it. Man, there's strength. There's strength in just doing the next right thing. And the whole time I was investing, it didn't matter if I thought I was going to make $1 million. I was unhappy.
Yeah.
I was so much happier when I was living in a more realistic, honest way in my life, just paying the bills. Like what I was shooting for never brought me any happiness. If I would have accomplished it, if I would have made all this money, and I still would have never been happy because I gave up my integrity. And I see people that have done that and they're not happy. Like there's so much more strength in just being true to your own integrity and character. And from the minute I started down that path, I wanted to get back to a place of zero. It just felt, it was overwhelming and depressing. And the prison was easier than those years. I just would say, please be so smart and so careful because I worked hard for what I had. This has been a 20-year gig, if you think about it. This real estate deal happened in 2005. It's 2025. I got off probation in December. That's 20 years of my 53 years on this planet. When you make decisions, they can have long-lasting consequences. It's affected my family, and that's probably why I do talk about it, because it's not like it was just go do a year and come home. It affected everything in my life. So just know that there's a price to pay
Yeah.
that you can't see, and it's big.
Yeah. I think the thing that hits me is if something hits you
Looks too good to be
wrong,
true.
if something hits you wrong, if something feels wrong, in my attorney clients often talk about if something bruises your conscience,
Yes.
pay attention to it. And if something seems really too good to be true and there's a red flag
It is.
there, pay attention to it.
Yeah.
Let me ask you one more question. How the heck did they catch you?
It's a good question, right? So the Porsha bunker thing was very unfortunate because she got caught up before I got caught up. So they were already looking at her. The division of real estate thing. So when you have realtors calling the division of real estate, but they have no jurisdiction over me, they reported it up the pole to the FBI. So my arrogance is what got me caught. My name and my arrogance.
Porsha, not so
Yeah.
loud.
Right. Exactly.
No
Louder,
louder, no
right?
louder. I love it. Porsha, I swear I cannot thank you enough for taking the time to do this and speaking so freely about your situation and the things you've been through. You mentioned you have some books out. May we put a link to your books in our feed in the video below this podcast?
That'd be great.
Okay.
Yeah, I'm there. Yep.
And
They can find me on socials or anything else too.
yeah, I was going to say,
I'm
if any of our listeners would like to connect or learn more about your work, is there a way they can get in touch with you?
Yeah. So I have a website, PorshaLauder.com, but I'm also on every platform, social media wise, and I'm pretty good at responding. So if you have questions, I have people that often reach out because they have family members facing some of these things, and I'll do my best to respond and help any way that I can.
Yeah,
So,
that's very kind of you. Thank you so much, Porsha. I appreciate your time, and thank you so
yep.
much for being here on the podcast today.
All right. Take care. Yeah.
LIA Administrators and Insurance Services, serving valuation professionals since 1978. We provide E&O insurance with a commitment to superior customer service, outstanding liability education, and unmatched claim defense. Explore our exclusive Appraiser liability education by Peter Christensen and cost-effective seminars designed to foster your growth. Our underwriters, with an average of 26 years of experience each, are dedicated to supporting appraisers. Visit liability.com to discover how LIA can safeguard your business.